I assume you think that on balance, the tax cuts so far have been a positive. But let me twist the question just a little bit to ask how much in percentage terms of the ultimate impact of the tax cuts have already filtered into the economy? Is it 10%? Is it 70%? I really don't know.
I think it's just a tiny amount. The immediate effect of the tax cut were things like bonuses and stock buybacks. That was just a way of sort of distributing some of the gains to workers and to shareholders. Far more important in my mind for the long-term health of the economy is to what extent will the lower corporate tax rate lead to more investment, higher productivity, wage growth in the future. I'm reasonably optimistic on that. And to what extent, and this is underappreciated, to what extent will the restriction on the state and local tax deduction stop states like New York and New Jersey and California and Illinois from sort of imposing a burden on the national economy because of higher taxes in those states depressing economic activity? So I think it's good news, but your earlier report about the dangers of higher federal spending, I think that worries me a lot and makes me concerned that the tax cut won't be very sustainable.
And I know you're also worried about the effects of trade policies that could undo some of those. Austan, let me ask you a somewhat similar question. By the metrics that the president has been citing in terms of unemployment, economic growth, historic levels of employment in certain quarters of the economy, how much of that good report card is traceable to the tax cuts that were put into place just 6 months ago?
I don't, virtually none, I think. I mean, I think I agree with our previous discussion that most of the impact of the tax cut has yet to come. It's clear that the trend of employment and the trend in the unemployment rate has been going since 2011, 2012. So I don't think that part is from the taxes. For sure, the one-shot dividend payouts, share repurchases, bring some of the money back from overseas, some of those things are due to the tax cut. But, you know, I think there's some good things in it, in this tax bill. There are a number of problematic things. It's going to increase the deficit by some, and the debt by some $2 trillion.
Have the tax cuts helped growth, or were we going to get 3%, 3.2% growth, whether the tax cuts have been passed or not? Or did the very fact that they were passed encourage businesses to invest more and consumers to spend more?
I mean, I would just be a little careful. The capital investment, which would be the part to actually increase growth, is up modestly. Most of what that money has gone to share repurchases and payouts. What we want is for the investment to go up. I think the jury's still out on that. The first quarter of GDP was pretty measly 2% growth. Hopefully, this next quarter GDP growth will be something higher.
Yeah, but, I think one of the key,
it's all in the context that it did blow up the deficit, and
we'll get to that.
And we are going to have to pay for it.
Don't you worry. I mean, I think one of the big advantages a lot of people argued was that it made the United States more competitive against the rest of the world, Dan, right? But I do want to pick up.
That's the best part.
Dan, I want to pick up, but normally this is where I say Austan, Austan, Austan. But now I'm going to say Dan, Dan, Dan. Republicans control 3 arms of government, and what are we getting? Piles and piles of spending. It's not supposed to go that way. You're supposed to cut taxes and cut spending, reduce the size of government in the economy. And look at these guys. They can't control themselves.
That's the very depressing part about all this. We had spending caps going back to the debt limit legislation in 2011. And those spending caps were broken in 2013. They were broken again in 2015. But then, Republicans control everything. So now we're going to finally get some spending restraints, some fiscal discipline, some entitlement reform. We got none of that. And not only did we get no entitlement reform, the Republicans in the House, the Republicans in the Senate, and the Republicans in the White House all agreed to bust the spending caps, not only to do more defense spending. Republicans like big Pentagon. They also busted the spending caps to do more domestic spending. And to me, that is a very, very depressing, in effect, indicator of whether or not the tax cuts, as I said before, can be sustained.
Are you happy, Austan? I'm finally complaining about the deficit spending?
Look, I want the economy to grow faster. I think if you look at the polling of what Americans think about the tax bill, it's remarkably bad. You have only 35% of people have a positive view of the tax bill, and I kind of think that's because they've read it. They know what's in it.
I disagree.
This was
I think
a
they
huge
haven't
tax
gotten there
cut
yet.
for
they
high-income
haven't filed
people.
their taxes yet.
No,
Austin,
look,
they haven't filed
it was
them.
a large
get that
tax cut for
postcard. It's gonna be
high-income
easier.
people and big corporations that they told us would increase wages, and it absolutely has not.
What are you talking about? Look where unemployment is at this
I'm
point.
talking about 2% of the money has gone to higher wages. 98% has gone to share repurchases and dividend
But Dan,
payouts.
don't a lot more people have jobs now as a result?
The job numbers are looking better, but I agree with Austin. We had a positive trajectory to some extent before Trump took office. That positive trajectory has continued. I'm still worried about labor force participation, both pre and post Trump entering the White House. But in my mind, it's the long run potential growth. Now, even if this tax cut only increases our growth rate in the long run by something like 0.2%, over time that adds up. That means a lot. Small differences in economic growth, if sustained, can really make a big difference. And I don't worry about the class warfare stuff. And by the way, I'll point out that this tax bill is not a deficit increaser in the long run. Starting in year 10, it's actually a slight revenue increaser. Now, that doesn't change the fact we need to control spending.
So let me ask you this,
That is only true
Austin,
because of the accounting gimmick that it's scheduled to phase out.
The reason it would be a revenue raiser, and a lot of the tax cuts do disappear. Let's see if that
Correct.
actually happens. Correct, Austin?
And they changed the definition of inflation. That's the big revenue raiser in the long run.
No, they changed the definition of what is a revenue loser. That's how they said it's not a revenue loser.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.